Welcome back. You're still watching Tonight, and it's time for us now to focus on data point this week. Remember, the National Treasury has proposed 4 bills. One of them is the Tax Laws Amendment Bill 2024 that is proposing to raise up to 178 billion shillings by amending several laws touching on the value-added tax, that is VAT, excess tax, income tax, and so many others that we'll be looking at. But for now, let's take a look at some of those for tonight. There is the proposal to introduce a new tax, which is significant economic presence tax. This will be affecting non-resident persons whose income is derived in Kenya. We are talking about businesses that are on the digital platform or digital marketplace. For instance, the ride-hailing apps. When you call a taxi to go somewhere, that company that owns the platform is targeted by the government for significant economic presence tax. And the taxable profit for those institutions will be 10% of the gross turnover, meaning the money they collect, 10% of that will be considered by the government to be their net profit and therefore taxable, or rather their taxable profit, and therefore be subjected to a percentage which should go to the government. And this tax will replace the digital service tax, and we'll be getting the percentages as to what that will mean. Now, there is another tax that is proposed, which is making its way back to the conversation, which is minimum top-up tax. And they're saying that if the effective tax rate that has been paid by an institution or a person, meaning an individual or an organization, of course, running a business, if the effective tax rate is below 15%, then they will be required to pay the balance. And how that will be calculated will be done like looking at the total tax paid divided by the total net income of that organization, multiplied by 100, that would give the percentage. So, for instance, if that results to 6%, then the difference is what the organization will be required to pay, meaning 15% minus 6% times the net income that the organization will have made in that particular period. And then that difference is what will be paid to the government as taxation. Now, there are several proposals to amend the VAT Act on several clauses, and some of these are going to now attract VAT. For instance, air ticketing services that is offered by travel agents currently is exempted from tax, meaning it's not subjected to tax. Now there's a proposal to introduce 16% on it. Then there are entry fees to national parks and national reserves. Currently, they are exempted, meaning no tax or no VAT is charged on these services. The proposal is to charge 16% on them. So the next time you go to the Nairobi National Park, for instance, if this becomes law, the entry fees will also come with a VAT charge of 16%. The tour operator services are currently exempted, are proposed to attract a 16%. Then there is pest control products and fertilizers, currently zero rated. There's a proposal to exempt them, meaning no VAT will apply to them. And the same will happen to the raw materials used to process or manufacture fertilizers and pest control, meaning that if the raw material is tax exempted, then also the product that is sold to the market will also be tax exempted, meaning the manufacturers will not be demanding for refunds from that transaction from raw materials to manufacturing. Now, there are some allowable deductions that the government is proposing. For instance, the housing levy. So far, people contributing to this have been getting an affordable housing relief. This is being taken away, but instead have the housing levy deducted. I'll be showing you how the calculation will be done. The shift deductions will also be allowable deductions, meaning that you'll be taxed on your income after these deductions have been taken off your gross pay. And it's currently, of course, the proposal is to scrap the tax reliefs, especially on housing levy, because that has been happening. So let's take a case of a model payslip so that we can do the calculation. For a person earning a gross pay of 50,000 shillings, the NSSF deduction at the moment is 2,160. The housing levy is 750 shillings. The shift deduction is 1,375. So the proposal by the government is that all these three figures should be deducted before taxing. So if you deduct them, you're left with 45,715, which will be now the taxable pay. At the moment, the taxable pay of a person earning 50,000 is 47,840, meaning it is just the gross pay pay, deduct the NSSF contribution. But now, if this becomes law, then the taxation will be on a lower figure. So if this happens, then a person earning 50,000 shillings will make a saving from tax of 525 shillings. Let's take a look at another model pay slip of a person earning 100,000 shillings. The NSSF deduction, 2160. Housing levy, 1,500. The shift deduction is 2,750. The proposal is that all these be deducted before taxation, meaning that the taxable pay will reduce from 97,840 to 93,599. Again, there will be a tax saving of 1,050 shillings, but at that time, there will be no tax relief, which you have taken into consideration in arriving at that figure. For a person earning 30,000 shillings, the NSSF contribution currently is 1,800. The housing levy is 450 shillings. The shift deduction is 825. At the moment, the taxable pay comes to 28,200, being 30,000 minus NSSF contribution. But if you deduct the housing levy and the shift deduction before taxation, then you get down to 26,925. This person will make a tax saving of 251 shillings once this becomes law. Let's take a look at something else. This is someone earning 200,000 shillings. The NSSF deduction remains 2160. The housing levy is 3,000. Shift deduction is 5,500. The taxable pay at the moment is 197,840, being the gross pay of 200,000 shillings, deduct the NSSF. But now, once you deduct the housing levy and shift, you arrive at 189,340 as the taxable pay. If this happens, if this bill becomes law, then there will be a tax saving of 2,100 shillings. But of course, you can see that there are other proposals that go ahead to see that may be taken away by other services. Now, the final example, for a person earning 500,000 shillings, these are the deductions. So the NSSF, the housing levy, the shift, if these are deducted before taxation, then this person will be, the taxable pay will be 476,590. And currently, the taxable pay is 497,840. But currently, this person benefits from the affordable housing relief of 15% of this figure of 7,500. So eventually, if this becomes law, the saving will be 5,250 shillings. It will take time because Parliament has to go through the entire bill and the other bills up until the situation that you have Parliament passing the bill into law. We'll be looking at more proposals in the bill in the coming days, but that's data point for this week.